We keep it simple with precision. Welcome to another video. In this video, I'm going to be doing a very quick breakdown on a trade that I closed a couple hours ago at 3 a.m. today. This was a trade that I explained during the live session I had a couple days ago on Saturday, actually. So I'm going to be breaking down this trade, and the reason I actually want to break it down is because of the nature of the trade. This wasn't just an enter, wait, and exit trade. This was more. I got into the trade. What, Tuesday, June 3rd. So that was last week, right? Yeah. So like I've been in the trade for like a week, or I was in the trade for a week. It played around for a while before it finally moved over the last couple of days, right? But I'm going to be breaking down the technicals, right, so that you guys can see like why I cut the move, how I anticipated for it to happen, entry and exit. But I'm also going to be explaining the psychology, okay, because it's not enough to just get into a trade and fingers crossed. You have to maintain your psychology while you're in those trades, or while you're in that trade, right? Depending on how the trade plays out, because there are times when you could be in a trade and it could play out for a while, just like this one, and then finally goes to your target. Some people might decide to just close in between. You'd be like, oh, it doesn't look like the trade is going to happen, let me just close the trade and just walk away, right? But if I had done that with this trade, I would have missed out on a 1 to 3 RR. Come on, I'd have missed out on a 1 to 3 plus RR, right? But because I was able to maintain my psychology, I basically stayed in the trade, and I was able to profit from it. So let's go to the charts. Let me break it down, then we'll talk about psychology. Okay, so this is the trade, GBPCAD, GBPCAD shorts, of course. So starting on and you can see here is a 1 to 3.4. It says 3.44 right now, but I closed slightly higher, somewhere here. Yeah, so like a 1 to 3.3. Yeah, 1 to 3 RR, right? So let me go to a clean chart so I can break down the gist for you guys, of course. Starting off on daily time frame, I'm going to wipe away the drawings and wipe away okay, so starting off on the daily time frame, first things first is price was in an uptrend. Okay, price was clearly going to the upside, and suddenly it pretty much stopped. You can see that the daily candles basically failed to continue going higher. Okay, so instead of going higher, they basically moved sideways for a while in this little box here, aka consolidation, right? So it moved sideways for a while in this little box. Okay, that's the first thing to note. Secondly, we'll go down to the daily time, the 4-hour time frame. Yeah, so on the 4-hour time frame, we'll see more details, right? And by seeing more details, we would notice that there is a clear level of support. Okay, there's a clear level of support here that price had been respecting, and finally it broke with this one huge candle. So whenever you see an impulse like this, okay, a break or an impulse, the next thing you should wait for is a retracement back to the area that it broke out from. Okay, you wait for a retracement, then you wait for entry confirmation, then you take the trade shorts. That's basically the gist, right? Okay, so at this point, price was basically at my area of interest. This was on Monday. And of course, when price at our area of interest, we do not just fly into the trade. We always wait for entry signal. So by waiting for entry signals, you basically wait to watch the candles that print. So when this candle got printed, it's sort of engulfed, not really engulfed, but like it's the same size as the bullish candle, right? See the white candle, that's my bearish candle. So the same size as the bullish candle, but I just needed extra confirmation, right? And yeah, this was my extra confirmation. So like I have mentioned before, my entry confirmations include engulfing candles and variation candle patterns. So variation candle patterns could include morning star candles, or just like candle patterns that are more than 2 candles at once. Do you get? So this would be determined as or deemed as a bearish variation pattern right here, because we have a bullish candle and we have 2 back-to-back bearish candles. Okay, and that's pretty much my entry confirmation. So at this point we go short. Stop loss beyond the area of fluctuation. Let me move this thing away. Yeah, stop loss beyond the area of fluctuation and target. So now usually I would want to target the previous low. Okay, if I'm selling, I want to target the previous low. Now the reason I went beyond the previous low this time around is because we are joining a new trend or trend change very early. Do you get what I'm saying? So when a trend is about to switch, right, when it's still in the early stages, just like this is still just the first leg. We're about to join the second leg down, right? That's the mindset around this trade idea. So this is what I mean. So you have an uptrend, and then price break structure. This is the first leg, and then you wait for a retest to get into the second leg. Okay, when you are joining a new trend early, you have more profit potential based on the fact that the momentum is still very early. Do you get what I'm saying? If I'm joining a trend early, I would want to anticipate for more than a 1 to 2 RR, just because I know that because the trend is still early, it has a lot of potential to move to the downside. So I would want to capitalize as much as possible from that move. Hence the 1 to 3 RR that I got from the trade. Okay. So at this point, we're in this trade. In terms of target areas, you can also go up to the daily time frame to identify potential zones where price could head down to. Okay, on daily time frame, I can see here we have some touches. Most recent touch here before the up move, so price could come down here as well. Okay. However, we still have our 1 to 3 RR put in place. So at this point, we are in the trade. Okay, we have risked properly. We have set our stop loss at the right place and set our target. So now we wait. So tell me why this trade decided to consolidate for a long time, bro. Like for a long time, this trade was just moving sideways, and then it eventually formed a level of support. Yeah, it basically found support at this zone and was just bouncing off of it. Back and forth, back and forth, back and forth, right? But that's the thing about being in our trades. Like, you have to understand that it's not always going to be straight to the point. Sometimes it would play around before it finally moves. But that's why it's important to, number 1, risk properly, and number 2, set your stop loss at the right spot so you don't get wicked out unnecessarily. Okay. So at this point, we are in the trade. We're just watching to see what's going to happen, because we have done our jobs as traders. I got into the trade on Tuesday, and then finally on Tuesday in the next week, which was what, yesterday? Yeah. So yesterday the trade finally broke this level of support. So at this point, I'm like, okay, now the market is ready to make the move, right? So again, I was just waiting and waiting for my profits to hit. Okay. Okay, this thing literally said, okay, yeah. So you see what I was talking about regarding the 1 to 3 RR. Price literally tapped this zone that I just drew on daily time frame and just reversed, right? But For me, like, I am a swing trader, but I am not a greedy swing trader. I take my profits and I go. Okay, I like to take my I take my profits and I go. I can always get back into the trade if the trade presents itself again. So that's basically the gist of the trade. Like, it's so straight to the point. Your trading should be straight to the point. It should be boring. It should be easy and simple. We're not complex. We're not keeping it complicated. It's just simple stuff. Okay. Yeah, so at this point, this was around what, 3 a.m. I closed the trade. I got out of the trade. Okay, I was already at a 1 to 3 RR. There's no need to wait for anything more. Anything more than that's pretty much greed. Okay. Yeah, so at this point now, the next question is, what should we anticipate for moving forward in this trade? I personally believe that we are still very early in this move. I just think that price could have some more downward potential. Okay, some more downward potential. As you can see here, price is currently testing the previous level of support it formed before it finally broke. So we could get a 4-hour break and retest move before the week ends, and that's the next move I'm looking out for. If it happens. Okay, so right now price is already at my area of interest, but remember that we don't just fly into our trades. Okay, at this point we just have to wait for entry confirmation. That's the next thing that should be on your mind, entry confirmation. So we should watch the candle formations to see the candles that print. If we get some form of bearish engulfing, bearish variation at our area of interest, we get into the trade. Read properly, put your stop loss at the right place, and leave it be. Okay. Yes, so with that being said, I hope that was straight to the point and easy to understand. Of course, remember the key things I just mentioned regarding staying in your trades is, first thing is you analyze properly. The second thing is you use proper risk management. You execute at the right place at the right time. Okay, put your stop loss at the right place. Stop trying to get such tiny stop losses that are what, 5 pips, 3 pips. Like, bro, that's not even realistic in the long run, right? So put your stop loss at the right place and leave your trade alone. That's all you need to do. Okay. So with that being said, I'll see you guys in my next video. Of course, trade safe.